Hello and welcome to today's NinjaTrader ecosystem event, introducing automated market mapping. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and selecting the Get Started under Welcome section. Before I turn the mic over to Josh, it is important to understand that futures, foreign currency, and options trading contains substantial risk is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Joshua.
Before we get started, I want to make sure everyone understands the risks associated with trading. I know we just went over it, but it's worth repeating because it's so important. Futures, stocks, forex, and options trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. So be smart, okay? It's very important. Okay. So today I am revealing for the first time a new analysis technology, which we've been working on for a long time, and finally had the breakthrough that we needed to translate the power of a timeless pattern recognition technique into algorithmic form, which has very exciting implications for traders. I do want to let everyone know up front that we run into some technical issues, so our free trial won't be available for you guys just yet. If you've been on our website, you see that is one of the things that we're really pushing with our launch, is to let you guys try it out for free, because we want it to be risk-free for you guys to figure out, is this going to help your trading? So that's what we're pushing out with. It's not quite ready yet, but I will still be providing a visual demo of the software for you today, so you can get a feel for what it's capable of. And then at the end, I will share how you guys can secure a grandfather discount as founding members. Also, as a heads up, I'm not going to be monitoring the chat very well during the presentation, just to keep me on track. So if a question does come up, please do save it, and I will circle back and take questions at the end. So let me start by sharing a little bit about myself first. I'm Joshua Benton. I'm a software engineer and the founder of Chartmap. I studied computer science and software engineering in university, and these last 8 years have been specifically focused on trading automation. I studied pattern recognition techniques under Daniel Rowe, with a particular focus on trend pattern finding using market geometry, which was absolutely pivotal for me because that single skill set became the backbone of this new technology, which I'm revealing today. I originally became interested in trading for trading itself, but what actually ended up capturing my focus was exploring better ways of using technology to trade. And that's really what brings us to what we're releasing today as a company. Chartmap has a very talented product development team with a lot of industry experience. And we are excited to finally reveal to the world what we've been working on for quite a while. And how fitting that the reveal is to you guys, the NinjaTrader community. I've been using NinjaTrader for the last decade and just have a lot to be grateful for, to have the incredible power of the NinjaTrader platform and the amazing people that back that up. Patrick, Michael, and Chris, you guys have been instrumental in helping in the process and getting this event put together. So yeah, special thanks to you guys. And let's jump into it. All right, so as any trader would know that has used or developed a trading strategy, trading is all about recognizing patterns, right? The goal of a trading strategy or methodology is to identify a recurring pattern in the market and place trades when a repeat occurrence of that pattern is expected. This is the basis of trading, right? Here's a very insightful quote for traders and very applicable to what we'll be talking about today. History is never antiquated because humanity is always fundamentally the same. So humans respond to the same environment in the same way, which means that if a particular environment repeats, the human behavior associated with that environment will also repeat. And in the case of the financial markets, since they're a function of human behavior, even with the advent of algorithmic trading, when the same or similar environment occurs, whether it's technical metrics or the geopolitical climate, whatever that is, the traders respond in the same way. So like Solomon says in Ecclesiastes, there's nothing new under the sun, right? History is full of recurring themes because humans keep doing what humans do, which means there's always patterns to be found in the market. And that's incredibly useful to traders. This allows us to make a very important conclusion. The past is a map of the future. And this is exactly what traders should be focused on, studying past data for patterns that then present opportunity when they reoccur. So keeping in this vein, to warm us up here and provide some context for what I'll be unveiling later, I'm going to introduce you to a technique for recognizing a very predictive price pattern. I studied this technique under Daniel Rowe, and I've spent literally hundreds of hours practicing and applying it, which is completely tuned the way that I view the markets and anticipate price reversals. It's led me to, number one, be convinced beyond a shadow of a doubt that markets are not random and price does indeed repeat itself. And there's so many examples that I could point to that we won't get into today. Number two, it's set me on a path to automating pattern recognition. And I'm sure you can imagine, the potential in automating something like that. So first, a quick history lesson. Okay. History doesn't get pulled into these conversations very often, but I think it's important for this one because it helps to communicate the value and credibility of what I'll be revealing later in the topic of this technique that we're going to be talking about. So this pattern recognition technique in its most general form is referred to as market geometry. Market geometry is a term that broadly speaks to the relationship that exists between price and time. And using various chart drawing techniques, we can highlight this relationship to make market predictions. That's the basis of market geometry, okay? Roger Babson invented what he called the normal line, which is shown here in this old news article of one of his published charts. So you can see these lines here. These are his normal lines. And he became very popular after he made some pretty bold market predictions that ended up actually coming to fruition. In 1929, he predicted a significant market crash, and then literally a month later, the Black Tuesday crash happened, which signaled the beginning of the Great Depression. Okay, so Babson invented the normal line drawing technique and made some impressive and well-documented market predictions. In fact, he eventually was called on by US President Franklin Roosevelt to produce a market forecast for him. So it's very clear that he was an impressive analyst with an impressive technique. Some of you may not have heard of Roger Babson before, but I'm sure many of you have heard of median lines, or you at least heard of Andrew's pitchfork. It's actually one of the drawing tools that's built into NinjaTrader. So George Merkle developed the original concept of median lines, which are a derivation of Babson's normal lines. This is an old chart representing the median line in its crude form on a very old chart. You can see the basic structure that resembles a pitchfork that we now know. So George Merkle developed the original concept of the median line. Alan Andrews then introduced the concept of the pitchfork in the 1960s as an iteration of the concept of median lines, which was actually interestingly inspired by Isaac Newton's third law of motion. And then Edwards and McGee published a book in 1948 called Technical Analysis of Stock Trends, which is one of, if not the earliest publications on the topic of trend lines and trend channels. And I'm sure a lot of us are familiar with that, drawing a trend line, drawing a trend channel to kind of project price based on its current direction. So you're probably picking up on the theme here, right? All of these guys are using some form of drawing technique to assist in pattern recognition, specifically to identify price channels. They have the expectation that if the current channel that defines the current trend of price can be identified early enough, there's some predictive nature or forecasting opportunity there. So market geometry is a proven trading methodology that's been used for a very long time. The simple reason for that is that it's very powerful for anticipating price movement, which of course is exactly what every trader is after, right? So I'm going to move over to a chart here and demonstrate the technique that I was alluding to earlier. Okay. You guys should be able to see my NinjaTrader chart. All right, I've got an ES 5-minute chart pulled up. I'm sure you guys have noticed that horizontal support and resistance zones are focused on a lot in the technical analysis world. You see a lot of vendors or analysts showing stuff like this. And I'm not saying there isn't value in horizontal support and resistance as long as it's drawn appropriately without hindsight bias. But what I'll explain is that the horizontal plane is just one slope, of course, a slope of 0. And the market doesn't just trend sideways, right? It trends in all directions, or you could say it trends at all different slopes. So the first thing to understand is that there's a huge amount of information that's revealed if you can identify the slope of the current trend of the market. Sometimes the slope of 0 comes into play, but oftentimes it doesn't. So there's so much more value that we can extract if we find the currently active slope. So the slope of the market's important. And market geometry, such as trend channels, trend lines, pitchforks, which are used to define price channels, do actually take slope into account, which is one of the reasons why they're so powerful. But most people don't use this technique. So I'm going to show you the technique, and excuse me, you'll see why without it, you actually miss quite a lot of valuable information. So a lot of us have probably drawn a trend channel like this, right? If you've used a trend channel before, this is kind of the gut reaction trend channel that you would draw. You would either draw it, you know, if you go from high to high and then draw back to a low, you would either use this high here, or you would use the highest high. Okay. That's kind of a toss up. It's up in the air. Like which one would you use? If everyone drew a trend channel, you know, it might be split 50-50 what people would choose. So that's a question mark, like, right? Like, how do I anchor this channel to give me the most value? So the concept, this technique that I'm sharing with you guys is really pretty simple. Anybody can do it. It's just that as you acquire the skill set of applying it by just doing it a lot, you become faster at it. But really, anybody can do it. It just takes time. Okay. So what we're gonna do is kind of answer this question of, okay, well, where do I anchor? And once we answer the question of where do I anchor my channel, I'll show you how to actually get even more information out of your channel. Okay, for making projections out of that channel that are valuable. So let's draw to this high, right? And then I'm going to create what's called a sliding parallel, which is simply a just a line at the exact same slope as that channel. And I'm going to bring it to different levels within that channel and look for different swing points that line up with the line at that given slope. And I'm looking for confirmation or validation that this is in fact a valuable channel. And that's the entire concept here. Is we're trying to validate the channel. And once you understand that, and you can apply this, especially as you get faster and you can do this quickly, it becomes very, 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 very powerful, because these channels, if you do them right and you validate them well, they're very, very predictive. Okay, so I can see if I draw this channel, I get some interesting touches, right? I get some support along this line that says, okay, there's enough here that this is probably not random. This is probably not random that I'm getting all these swing lows. There's of course random line theory, right? Where we just have this bias and we interpret something as being not random when it is. But when you start seeing swings that line up in this way, you start to go, maybe that's not random. Okay, maybe I'm actually onto something and actually defining an active channel, and I've defined the slope of the active trend, right? So this is useful because if we drew the channel that a lot of people would draw, it gives us even more value, right? Because if you were back here and you drew this channel, right, then you have some additional support that comes in, and that gives you some additional information to use for making a trade, right? So that's valuable in and of itself, because it demonstrates to us that yes, the channel that we picked was valuable. But let's use the same concept to find another channel, okay? Because maybe that's not the best way to draw the channel, okay? That might be the obvious one for a lot of people. But instead of this, let's draw from this high to the ultimate high, okay? I'll create the sliding parallel. And you can see right away that it lines up beautifully, okay? So by validating the slope, if I was doing the analysis in real time, like let's say we were here, I could tell by the fact that we had all of these touches right here on this sliding parallel, that we've found an active channel. We've found something that's going to provide some predictive power. Okay, look at all those hits. So now I have confidence that as the market unfolds, we're going to expect some reactions from those levels again. And that's exactly what happens. So we get the hit at the low, at the high, we get kind of a pullback retest that takes us out of this. So you can see that there's just a lot more information that we can pull out, not only by confirming that we have selected the correct channel and anchored correctly, but once you've done that, you can then use the sliding parallels within the channel to provide even more levels to trade from. Okay, so it's really, there's two new insights that we get from using this technique. So I'm going to leave it there. This is literally the last 2 days of ES data. There's actually an excellent channel right here that we could draw, which I don't think I will take the time for, just due to time constraints. But it happens all the time. Okay, so if you practice it, it becomes very useful. It does take a lot of practice, but it's powerful. And it works on any market. It really does. Anything that moves, it has price, because all markets are driven by an inherent human behavior. They're controlled by human emotion and human psychology. It all works that way. So very, very powerful. So you can probably tell that this is a lot of work. I'm not discounting the method. I think you should learn it. I think any trader should learn it, but it's a lot of work. It takes a lot of time. I've spent hundreds of hours practicing this and using this. And that's actually a major downside of market geometry for pattern finding. It's a very discretionary discipline that requires a lot of time and a lot of practice, which is a very real barrier for traders, and why market geometry isn't more widely used. I mean, there's definitely a lot of traders that do use market geometry, but this barrier does mean that only the traders that have the time and the interest to learn and develop the skill set are ever able to significantly benefit from market geometry. And the reality is, pattern recognition usually is a lot of work and usually pretty complicated when you start trying to explain it or put it into rule sets, especially. It's why automated trading is so challenging, because the markets are always changing, which means patterns are always shifting, and humans are much better than computers at sensing these changes and automatically adapting. And I'm not saying automated trading is impossible, but I've personally programmed over 100 automated systems at this point and have quite a good pulse on the fact that it's very difficult to achieve consistency using strictly rule sets and mathematical formulas. And that includes AI, by the way. That's the topic everyone wants to talk about right now. But for the purposes of trading, AI and machine learning models are actually much more useful for filtering signals than for making actual market predictions. And this is why I believe that the quote unquote holy grail trading methodology, right, exists in a balance between man and machine, or technology augmented trading. So my focus with the technology that I'll be unveiling later today is to innovate on the machine part of that balance and make it significantly easier for the trader to make good trading decisions. If you know this quote by Alan Perlis, fools ignore complexity, pragmatists suffer it, some can avoid it, geniuses remove it. So you miss out on the power of pattern recognition by oversimplifying the problem. As an example, I think a lot of moving average techniques fall into this, and unfortunately they're wildly popular because they are simple. But simplicity is important for traders because it promotes consistency, right? Simplicity breeds consistency. So if we can achieve simplicity the correct way, not by ignoring complexity, but by removing it, by understanding a proven model such as market geometry, which has been used very successfully for centuries, and then translate that into algorithmic form done by a computer that doesn't require a learning curve, doesn't require time, doesn't get tired, and doesn't make mistakes. That is where the magic happens for the trader. And that is what I'm excited to share with you guys today. So I would like to officially unveil Chartmap for the very first time. Chartmap is an automated analysis software for NinjaTrader that runs thousands of simulations across multiple timeframes to isolate the prevailing trend structure, effectively mapping the markets. It completely automates pattern finding and formats the output into an easy to read heat map visual. And we haven't taken shortcuts to oversimplify the underlying model. So because of the massive computational demand of the thousands of simulations being run to generate that output, Chartmap uses cloud computing, where the bulk of the computations are offloaded to the cloud so that performance is fast. And then the outputs are transmitted directly to the trader's NinjaTrader chart in real time. So it's very cool. I can talk up the technology all I want. I mean, it really is a pretty remarkable automated analysis solution. Just the technology that and the work that's gone into it, the problems that have been solved. There's a lot there, but what really matters is the value of what it's outputting, right? Unless you're a technology enthusiast, that's all you care about. And most of you guys here are traders, and you're curious, does Chartmap work? So I'm going to spend some time right now showing Chartmap on current market data so that you can get a taste of what it does. And then at the end, I'll show you guys just how to take advantage of a founding member discount that we'll be offering once we do go live with the free trial. Okay. So you should be able to see another ES 5-minute chart. Welcome to Chartmap. So there's a lot of color. Yeah, not color because it's all white. There's a lot of clutter, I'll say. It's something that visually will be consolidating, but as you'll see as I get into it, these levels that are being outputted are incredibly powerful. So it just at face value, if you get any kind of reservation at the fact that there's quite a few visuals going on, I'd encourage you to sit tight as I walk you through. Keep in mind, everything that you see on this chart was generated in real time as actionable information. So there's zero backpainting or ghost outputs going on. What you see is what was available for making a trade decision on that bar in real time. So I'm simply going to walk you through some data, and we're just gonna observe how price has responded to Chartmap, and I think that'll give you guys a good feel for Chartmap and the value that it provides. Okay, so this is an ES chart. I haven't cherry picked. This is 5,000 bars. I'm just going to start at the beginning, but this runs all the way to the current session. If we have enough time, I'll go through gold as well, but we'll see how long we have. So Chartmap is looking for these patterns, right? And it's running a bunch of simulations, and it's looking for where in the past has price been rejected. And then it's looking for projections of those rejections, and it's putting that on the chart. So where you see white, where you see these white bands, that's projected price rejection. In other words, where there's white bands, we're expecting that there's a decent chance that those white bands are going to give us it's going to be a fight, right? Whether we get price rejection or we get some kind of reaction at that area. That's what the information is that's telling you. It's just very important to realize that these are not projections. So where you see a ray, someone would draw a ray, right? And at some point, like, you use hindsight to figure out that's where I want to draw this. These are all projections. So it was all available at the time of the bar on which it's located. That's where it was calculated, and it's never changed, right? Okay, so let's just go through it. So starting at the left side of the chart, we come up and hit the first area, right? We come up again and we hit a stronger area. It gives us the high. We drop through, and this area here, it gives us the low. We break through, we pull back to this area. I hope you guys can see this okay. I know it might be some of these levels, it's all gradient based. So depending on the strength of the level, that dictates how bright the level is. So some of these might be a little bit hard for you to see. I apologize for that. When they're on your charts, when you can try this for free, there'll be no mistake. Okay. But I'm just gonna point out what I can see very clearly. So price pulls back to this level. We break through this major level here and pull back and test it. There's the low. There's the low. You come up to this major area. Okay, we did break through when this area started. We pulled back for the retest. That gave us the low. We came up to the high. This gave us the high. We retest. It gave us the high. We break through somewhat of an overthrow of this area, but the high gets put in. This gives us the low. Retest here. Okay, overthrow here. That one's that would be a little bit tricky because it came quite a ways through that area. Clearly resistance here at this level eventually broke through. We got an overthrow at this level and came back. There's the low. Okay, you can see it getting supported. So it you can see it sort of price converges as we follow this up and we finally break through. So support clearly on that level. Break through, come down. Where's the low? Right there at that strong area. And then you can see the model adapting. So it decides, oh, we've shifted, and that higher low right here comes in at the adjusted area. You can see a light area here where we put in the high. we break through very quickly, come back. We actually have a light area here at the low, pull back to that area that gave us these two lows, and there's the high. Okay, so you're picking up on a pattern, right? I'm not going to go through everything. This is a really strong area that price is just very, very well respected. There's some instances, I'll keep kind of going along here. There's some instances where you get a little bit of chop, I'll say. And there's actually, I'll explain it when we get to it. Not a lot of areas here. Here's the low. The high gave us the high here and here. It gave us these lows. It gave us this high. It looks like it hadn't quite started printing, so it didn't give us this high. It gave us these lows. It gave us this high and this low. It gave us this high. It was a little bit shallow right here. We break through. There's some visual artifacts like this. You can see it's like there's a kind of a pixelation going on. That's something that we need to resolve. It'll be rolled out in an update after we release. But it's just a small visual annoyance. But you can see we're kind of contained, kind of bounce back and forth in a wedge between these strong levels. We finally break through, pull back and test it a couple of times. You can see we're sitting under this support, and we go as low as that next area down here. So you can just see the containment between the levels. We break through this strong area, pull back for the retest. That same area gives us that low. I don't know if this comes in very good for you guys, but there's a light line right here that gives us the high. So I mean, it's pretty cool how precise this oftentimes comes in at the various pivot points. There's the higher low, right? Here's just undeniable support coming in at this level. You can see price just hugging that line. And then this is what I was talking about. Sometimes you'll get instances of, I think it's mostly related to when there's kind of a bit of a choppy price action. It'll basically, you can get kind of a jitter between simulations, and that's something that we're working on. It doesn't happen very often, but that's something that we will improve in the algorithm in not very long. It's something we're actively working on. So yeah, I can just keep drawing these things, right? I'll just scroll more quickly just so you can kind of see. This one we kind of bust through, pull back to support at the low, bust through, pull back to support. There's the low. There's not a lot of areas in this section. This gives us the high and the low. You can see that we're contained within these areas. Once we finally break out, we retest, and there's support here off the top side that we broke out of. Here's the high and the high. Here's the low. There's the low. That was barely printing right here, so you kind of had the high. Oops, kind of had the high there. So you get the point. Let me just, yeah, this is just Beautiful. High or low, high, low, 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 high, high. Right? So because the algorithm is dynamic and it uses recent price data, it's automatically adapting to changes and finding the most relevant price patterns. This is today, today and yesterday. You can see containment here at the high. This gets a little bit messy in here. It still is contained. You can see support off that same level there. There's the high. Then you can kind of see it fighting against this level, and then it never quite makes it through. Yeah, this is a little bit messy in here. There's the low. Okay, so that's ES in the last 5,000 bars. So it's not cherry picked. Let me go through gold really quick. This concept translates to dare I say all markets. I've not found a market so far that it doesn't apply to. But just to kind of demonstrate the multi-instrument nature of it, let me just quickly go through gold. This is a little bit messy in here, but you can see that we're trapped between these levels. We finally break down and retest what we broke out of, and then we keep retesting it. We break through. There's the high and the high, the high. We just keep retesting that area. There's the low. See, we got that huge volatility, came back, and even in that, with that volatility, that wick came down and stopped right at that level. Here's the high. Pull back. Here's the low. It just happens over and over. So, and then here's today. So that's a taste, guys, of Chartmap. Like I said at the beginning, we're working on some reducing some clutter. There's some areas that just aren't relevant, that don't need to be drawn. So we want to make it even simpler. Although, I mean, really, all you're doing is looking for color. You're looking for a brightness that represents past price rejection. So it's really like, to use it so straightforward. That's all you're doing. You're saying, hey, where's color? Where's there a confluence of areas? Where's there brightness that indicates price has been rejected at this slope projected forward? So that's a place to watch out for, because there's a good chance there's going to be a fight there, and price is either, it's gonna meet resistance and either reverse there, or I mean, of course it can break through. You've seen plenty of examples of that, but it's clearly not random, right? It's clearly picking up on patterns that are providing a lot of useful information when price revisits those levels. So I'm gonna leave the demo at that, and then we'll kind of wrap this thing up. So let's see. Yeah, like I said at the beginning of the presentation, we've got some technical issues to work through to make the free trial available for you guys. We're actively working on that, and we should have that available pretty soon. but I'm going to show you guys how to secure a founding member discount for free as the first Chartmap subscribers and be notified right away when Chartmap is released. Should be soon. Okay. Technology is unpredictable, so I'm not going to promise any dates, but it should be soon. We're almost there. But if you're interested in learning and trying out yourself, then we'll keep you informed if you get in touch with us. So let me explain kind of how that will work. I'm going to switch over to my slides. Okay, so for the founding member discount, because this is the initial launch of Chartmap, as a founding member for the life of the subscription, you'll be grandfathered into discounted pricing because we're celebrating the launch of Chartmap and rewarding our first Chartmap subscribers. So regular pricing is $149 per month, and for you guys, we're lowering it to $99 per month, grandfathered at the rate, grandfathered at that rate for the life of the subscription. So this includes all supported markets, which we plan to launch with the ES, the NASDAQ, the YM, RTY, crude oil, gold, euro, and BTC. So because everything's cloud computed, there's so many computations going on here. We have to offload those calculations to the cloud, and then we pipe the outputs back to your chart, right? That's what makes this possible. Otherwise, it would be just ridiculously slow for users to actually run this on their PC. So the cloud nature of this makes it possible, and the cloud nature of it means that there's some backend to work through to support new markets. We're working on a dynamic solution to really open that up and make that user definable. But for now, we're planning on launching with those 8 markets, with more coming. Yeah, that's the gist of it. So as far as, because the free trial is not available just yet, to secure your discount, because you guys are here and you want to put your stake down that you were here, you were an early member, all we're going to ask you to do is email support@chartmap.com, and in the subject, if you would please put launch, the word launch, into that email and send that to us. Then we will put you down. And number one, we'll keep you notified when we do release soon, so that you guys can go download the free trial and try it out. And that also secures your founding member discount that we just discussed. So there's zero financial commitment. All you're doing is staking your claim as an early member. And then once it's released, you can free trial it. And then if you like what you see, you can choose to keep your subscription past the trial period, and then you'll be billed at that discounted rate if you do choose to keep the subscription active. So that's it for today, guys. It's a very exciting time for us as a company to finally unveil this technology that we've been working on for a long time, and we're excited for traders to finally be able to start leveraging it very soon. If you're interested in trying it out, definitely send us that email to claim your spot, and we'll let you know when we go live. We truly do want to see you guys succeed. If we were selling Chartmap as a money grab, then I would follow up the hype of a product unveil with an inflated one-time purchase price. But that pricing structure is almost never in your best interests, because you have to take full risk up front that the software ends up delivering the value that you hope it will deliver. With a subscription model like we're using, Chartmap as a company will only ever earn, of course, as much revenue as the product is providing value to traders. If it's not helping people trade better, then they stop subscribing. It's as simple as that. So Chartmap is financially risk-free to try out. Once we release very soon, I truly hope to deliver tremendous value to you guys. So with that, thank you all so much for attending today. And I'm going to open it up for questions if anyone has anything before we wrap up. Yeah, we'll have some visualization options, Joe. So you can find the right kind of color contrast on your chart so that it's easily visible if the white's not working for you. Yep, so there'll be some user options. So Martin is asking, what's the difference from regular supply and demand? So Chartmap it's going to be a function of supply and demand, of course, like everything, but it's identifying levels in a unique way. So think of it as a slope sensitive support and resistance model. That's essentially what it is. So like I demonstrated that channel drawing technique, that's what Chartmap is doing, but on a huge scale and automatically. So it's finding the currently active trend and all of the levels within the channel and outputting that in real time. And Brad's asking, shouldn't the lines move forward past the price? That's kind of what you'd expect, is like a projection, because that's how we usually see support and resistance, as a projection of levels into the future. That's kind of the concept within the back end. But we're not projecting, because as traders, we don't care about we're not back painting, because we need actionable information. So we're let me rephrase that. We are projecting. That's the only thing that we're showing. But when the model decides that there's a new trend at play, it's going to auto adjust, right? So that projection is going to change. So all you're getting is actionable information. You're not getting, there's no look backs, there's no back painting. I hope that makes sense. If any of it is unclear, you guys are going to get it. You can trial it for free, right? So you're going to be able to get it on your own charts and see for yourself. The time frame, we've built it to be time frame agnostic, so that's up to you. And I should actually note that what I demoed today is only one time frame. The actual release algorithm employs 4 different time frames. So which is quite a there's a lot of value in the multi-time frame aspect of the deployment algo that we'll be putting out. As far as what chart you're using to trade, that's up to you. It'll adapt to whatever time frame that you're running Chartmap on. David is asking, will it be automated? I talked about kind of if you remember in the middle of the presentation, the quote unquote holy grail trading methodology, right? That I believe exists in a balance between man and machine, because humans are a lot better at recognizing and adapting. There's a huge amount of value to having a trader at the wheel. And I've developed a lot of automated systems. So I know for a fact that there's a huge amount of value in making it easy on yourself by simplifying the analysis, but letting the trader make those decisions. And that's what this software is it's throwing at you incredibly powerful levels, saying, hey, look what we're coming up to. And then you as a trader take that information and use it and use it to trade. So as far as an automated system, it's not taking entries for you. That's not what we want to do with this software, because I just don't think that that's the best way to use it. Jacob's asking about range bars. We'll probably roll out, I should first say, we've built the infrastructure to allow for various bar types. It's based on I won't get into the technicals, but right now we're trying to polish that aspect. It works best on time-based. So we're going to encourage people to use it that way at first, and we're going to keep pushing out updates to make the experience on other bar types better. So I guess to answer your question, it kind of does. It's still kind of a beta functionality that we're working on. Joseph, the green and red arrows, can we get them printed? No, that's just me pointing out areas to make it easier to follow. You can do that if you want with your own trading, but I think it's best to just keep it formatted in a way that can be versatile and clean. So we'll see we'll see. Like I said, we're going to be working on polishing some of the visuals. So some of this may change in the future, just to make it a little bit easier to follow and read. I know that when you're zoomed out on the chart, you kind of see a lot in one field of view. So maybe it gets a little bit overwhelming until you kind of zoom into current price and what's near current price. So I'm sure a lot of that's going to get polished. We have a lot of stuff that we're excited to push out as updates to Chartmap. Jan, the free trial will be for 14 days. And if you send us that email, which I'll go back to, you send us an email to support@chartmap.com with subject launch, then we will put your name on the list for the founding member discount, and we'll notify you when that free trial is available. Awesome. Sounds good, Jan. Are there any more questions, guys? I mean, ultimately, I want you guys to be able to know for a fact that it will or won't help your trading. I believe it will, but I want you to be able to prove that to yourself by using it. And that's the beauty of the free trial, is you can do that risk-free. So if you from the demo, if you said, hey, that looks predictive, that looks like it's putting out levels that price turned at over and over. If there's like any kind of curiosity peak there, then I would just encourage you to send us that email to stay in touch for the release, and then try it for yourself. I mean, the setup is very easy. We use a cloud-based licensing system, so there's no waiting for licensing to come through. There's no waiting for us to send anything. It'll happen instantly. So you can be up and running with the free trial once we release within a matter of minutes. So it'll be super easy for you guys. Okay, guys. Well, if there's no other questions, then we will wrap it up there. So thank you all again so much for coming, and enjoy the rest of your week. Trade safe.
Thanks again, Joshua, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for future webinars and follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Chartmap and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.